Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Friday, December 23rd, 2022. Before I jump into the charts like this one, please click like if you would each and every time you watch the daily Tesla report. We also do the daily Apple report if you happen to be watching that on YouTube. And subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded for your viewing. And share it, if you would, with friends and colleagues. So this is the weekly chart of Tesla. If you've been a Tesla follower now for the last few months, you know that we had a significant sell signal the week of October 3rd, then anticipating this band of channel support that this week is 164.46 to 172.57. We spent the better part of a month bottoming out here before sending off yet another meaningful sell signal the last week, the week of December 12th, and that set us off. That set the market up for, can I speak? That indicated, let's put it that way, following that sell signal below 164.46 to 172.57, anticipating now the next band of channel support between 107.04 and 118.74. This is that correct? Yes, it is. Why does it not seem correct? I'll tell you why it doesn't seem correct, and I'll go there right now. And that is because on the daily chart, it's actually 116.91, and that is the number that I'm using today. And we've come in very short order, a 3 to 5 week sell signal that may well complete itself today inside of 2 weeks. This 120.33 channel bottom that we tested on Thursday, still in reach today. We came off it very modestly, 120.33. I hate to bunch all these numbers up, but you can see right here, I've got 120.33 that is backed up by 116.91, which is the more significant. 116.91 is the daily chart version to the weekly chart, by the way, at 118.74. I don't even put 118.74 in there, but if you're an aggressive intraday trader, and I say that beyond day trading, intraday trading, you're trading more than once a day. You're trading, you may be scalping for several point moves. You could, if you wanted to, squeeze 118.74 in there. But really, I'd rather just keep it simple and call it 120.33 down to 116.91, which is this chart here. This area, especially 116.91, would be a met objective and can, as I've been saying, contain selling through January. From here, and I want to call this really the start of a range, unfortunately, down to 105.72. This is another band of channel support that has been an objective now since last week's sell signal, and it can contain selling through January. And from here, we can rally back into the 164.46 to 172.57 region over the following 2 to 3 weeks, perhaps, something in that order, I think. And that's kind of where I'm going to leave it. I am not prepared to say at this point in time where this market will go if we settle today below the 107.04 level, which is 105.72, as I just showed on the daily chart. I don't see that happening today. I don't see the market selling off $20. I mean, it sold off 12 yesterday, so I shouldn't be so quick. But that was an exceptional move on Thursday. But I will say, and I was saying this a few months ago, that if we close below the low 170s, as we did a couple of weeks ago, that you cannot discount the possibility for a retest of the 23.36 March 2020 COVID low. I know the fundamentals don't back it up by some measure, but maybe they will by the time we would reach it. And I don't like to mix fundamentals with technicals. I like to keep it simple with the technicals. That's what I've been doing for years. I don't disavow the fundamentals. They are the market, after all. But in terms of the line studies, in terms of the big picture analysis, I'm going to say that if we settle today, the week itself, below 107.04, and that would be a daily chart, by the way, below 105.72, then yeah, I think, let's say by the end of February, I know it doesn't seem likely, but yeah, I think we could unravel all the way back into the 20s. But that hasn't happened, and I'm not expecting it unless we close below this band of channel support, which is now in close reach. So, hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels.
Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today.
Let's talk upside today. There's a lot going on here. I've got all these minor points. I've got 130.55. I don't even show that here because there's too much else to show, but 130.55 can contain intraday buying. And if we happen to push or open above 130.55, then I would expect this area here on an intraday basis, 139.67, that I bumped up to a 2-star level, meaning that if we tested it today, it could actually contain 2 to 3 day highs, which means into the later part of next week. From here, we could fall back to long-term support that begins at 116.71. That long-term band of channel support that I showed a moment ago. 139.67 is also the start of a range up to 143.64. 143.64 is this long-term trend line. So this is the area here that if settled above today, and I think that that is a long shot, but if we did close today above 143.64, this market recovers nicely next week back into the 164.46 to 172.57 area, which is once again this long-term band of channel support, now a ceiling of resistance into later Q1 or through January anyway. I'll also mention that 172.57 here is now backed up by a new channel top that we find at, where are you? Here it is, 174.26. If you recall, if you've been watching the Daily Tesla Report for the last few weeks, there has been a channel top coming down in the 190s, then 180s, but because of this new significant low, it gets recalibrated, readjusted. 174.26 is that magic number. So what I like about this is that if we happen to push back above this band of long-term channel resistance now was support, it would, if we happen to close above it, it would also involve a classic buy signal above this channel top. So a lot going on if we happen to close back above the low 170s over the next couple, 2-3 weeks. If we happen to get back up and over this area, we actually have a meaningful buy signal into later Q1, or at least through January trade. But until then, holding below the 164.46 to 172.57 area still maintains this lower region as an objective, and we are very close to testing it now. I'm going to show it once again on the daily chart here. 120.33, this descending channel bottom, is the start of a range today down to 116.91. And even if we close today below 116.91, doesn't look pretty. We've got 105.72 then into early next week. And it is this band of channel support that just might absorb selling pressures through January. And from here, we can rally back into that 164.46 to 172.57 region within several weeks of doing so. And that would be the area that, if settled above, would mark a good low through Q1. But, you know, I don't want to get too far ahead of myself here. I hope all this made sense. All the minor points have been carefully chosen, and I've gone over the more notable ones, and I will just leave it at that for Friday's Daily Tesla Report. I'll be back Monday afternoon with Tuesday's Daily Tesla Report. You have a happy holiday. Have fun with your family and friends, and we will talk in a few days.